What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be doing a little update on the Sofi stock. We had a pretty solid day today, only down 2%. And you got to think about, yesterday's gains, was right around 9%. So looks like we're holding up a lot of gains and people are starting to realize the opportunity that Sofi has at these price ranges right now, leading up to earnings in literally under a week. We're going to do some comparisons about other companies. We're going to do some comparisons about companies' performance around these earnings, just to give you guys more updates on what to be buying right now in the stock market and what to look for, with all of this reopening and stay at home, stocks. You have to understand what's going on in the world and how these companies are being affected by the reopening. And if you feel any of this information is useful, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's going to be a lot of great information coming out. You don't want to miss it. Let's get into the video. All right, guys, down 2% today, down 0.6% in the after hours. I will take this any day after a 9% gain on the stock yesterday, okay? So it looks like this stock did bottom right around 15, just nonstop, bouncing around in the 15s. I believe the bottom is in because we are getting so close to earnings, okay? Earnings is literally, 7 days away. Plus the weekend, guys, that's 2 days counted off. So, tomorrow we're down to 6, the weekend 5-4. On Monday, we're down to 3 days within earnings. So I don't see the stock selling off before earnings. I think a lot of people have been doing their research, and if anything, the stock will just hold its price range. It won't really sell off or go up drastically. It'll most likely just hold its price range before those numbers come out. And I'm telling you, institutional investors and big money whales out there, they're going to try and clean up as many stocks as they possibly can after that earnings report. When I tell you clean it up, I'm talking about clean it up for the next 5 years. They're going to try and hold as much stock as possible. So this thing could really run. We're seeing companies 10 times larger than SoFi, 122 billion market cap. We're seeing stocks like this jump 25% in one day off of the earnings report, guys. So if a company 10 times larger can jump 25%, what does that tell you that could happen with SoFi? I mean, it's literally 10 times smaller company. Check out the market cap, guys, 12.8 billion. So if Snapchat can jump up 25% on a good earnings report, there's no telling what can happen with SoFi Technologies if they give that magical word that all of these companies have been giving or not giving. This is the magical word. Are you ready? This is the magical word. Guidance. Massive guidance. Guidance is your future. This is what investors want to buy into. As soon as they hear weak guidance, slower growth, user growth decline, boom, plummets. That's going to put you back 3-6 months, on a company, multiple earnings reports. That's what we're seeing in these earnings reports, guys. And I did a lot of research for you that I'm going to show you with about 5 to 6 companies of about guidance and performance after earnings and how this affects the stock's future. And guys, if SoFi does give massive guidance on top of a double beat EPS and revenue, guys, we could see a 30, 40, 50% move in literally like a month. I mean, I'm telling you, this thing could move 50% in a month, okay? The big move is going to obviously happen in the first 2-3 days, but I'm telling you, overall in a month, I mean, we could see a crazy move, okay? Just because of how small this company is, how much growth this company has, and most importantly, and on top of that, experts price targets right now, 65% upside. We only have, 2 buy ratings right now, and I have showed you how the media and the analysts have kept this company, hush hush, quiet on the down low because there's other companies, the same revenue that went the IPO route that literally have 20, 30 analyst coverage, and these stocks went, public at the exact same time. That is Snowflake, Airbnb, and Coinbase. Amazing growth stocks that just got priced at a much, much richer and higher valuation because they went the IPO route. That's the thing about the SPAC stocks. They give you opportunity to get in at a lower valuation. The SPAC stocks are for the people, guys. And I believe SPAC stocks, those bad headlines are going to eventually go away after we see companies like SoFi, Open Door, A Point, start really killing it on earnings back to back to back. That's what I see happening in the future, and SPAC stocks eventually get a better taste in investors' mouths. Once again, guys, this is what I'm talking about. You would rather have a slow and steady incline because a crazy, ridiculous 50% gain in 1 hour off of no news, no massive acquisitions, deals, earnings reports is going to cause your company to bleed out slowly. And that's what the Reddit forum is doing to a lot of high quality companies. They are hurting these companies' short term future because they're causing artificial pumps that aren't realistic and can't justify a company's valuation. And that's exactly what I did in my last video. If you're new to the channel, go watch that last video. I specifically said Robinhood is going to bleed out, drastically because of that massive, massive jump they had. Literally, guys, just yesterday, Robinhood topped $85, guys. And boom, in a blink of an eye, the company is down 28%. The company also announced, crazy news, that definitely affected the stock in a drastic way. Robinhood retreats after monster rally this week as stockholders file to sell 97.9 million shares, guys. That's like 3, 4, maybe even more billions of dollars. So it looks like investors are filing to sell stock and cash out. And that's the thing about these IPOs, and this is what they do. The early investors 5, 10 years ago, try to cash out at these drastic valuations because they know, they're smart, that these valuations aren't justifiable to happen that fast. So, Robinhood was literally tapping like 60 billion market cap, literally yesterday, which was literally, 5, 6 times larger than SoFi. So, but as you can see, guys, you have to be very cautious from, these Reddit forums, these Reddit pumps, because you have to be in and out in literally one day, or you're gonna, be holding the bag. There's gonna be people that are holding, big amounts of Robinhood at 85, 75, 65. They might be holding, a long period of time to get their money back. And that can happen all the time in the stock market with, these artificial pumps. So that research that I was talking about that I did for you to show you guys what companies, if you want to be looking at other companies besides SoFi to be buying, take a look real quick. The S&P 500, the Dow, the Nasdaq, Russell, everything absolutely exploded. Now you have to be very cautious of what stocks are moving because a lot of these stocks, are heavy weighted in these indexes, like the S&P 500 in specific. And you have to be cautious because a lot of these day traders may be pumping up stocks that, may not have, the best performance, with what type of times we are in inside of the stock market. We're going to look at bar charts real quick. I recommend bar charts for anyone that wants to be looking at the ups and downs to see what stocks are moving. So guys, as you can see here, the stocks today were absolutely exploding, but you need to do some in-depth analysis to see what stocks are moving. Are they justifiable moves? Why are they moving? You have to do your research, guys. And if we scroll down just a little bit, we're going to be talking about this company in specific, Datadog, because it's going to show you exactly what type of companies to be buying. And they just reported earnings, guys, plus 15%. Okay, let's scroll down. And these are the companies I really want to be talking about today, okay? Wynn Resorts, there's crazy COVID cases spiking, around the world right now with the new Delta variant. These companies are flying, after their sell-offs, but is it a good time to be buying these? Wynn Resorts, hotels, American Airlines, Royal Caribbean, Carnival, Norwegian, MGM, Gap, retail, Las Vegas Sands, JetBlue Airways. So guys, all of these companies are up 5, 6, 7, 8%, guys. These are massive jumps. So are these good companies to be buying right now, with, the reopening, already being reopened for months and months, and these companies are now reversing after their sell off. It's just, you have to be very cautious. These might be good trades for you to be in, but are they good, long term holds for companies that can disrupt, the world, disrupt, the financial market? That's what we're talking about with SoFi, going after these banks and credit card processors. Are these companies life-changing companies that you want to be putting massive amounts of money in? Or are these companies you have to be looking at your portfolio week in and week out, with day trades and, pullbacks and reversals, the economy closing down again, the economy reopening? We want to find companies that can thrive in a reopening environment or in a shutdown environment. Okay, that's what I'm looking for. I want to see a company that their numbers cannot be affected in a negative way, regardless if the economy's in reopening or closing or lockdown. Okay, that's what you want to be looking for. And I'm going to show you guys the research I did for you to show you why you should be very cautious on what you are buying right now, because the lockdown and reopening can affect your stock drastically. Massive moves can happen very fast. So this is the research I did for you guys today. This was all earnings reports from yesterday. Okay, these are really, really big companies that I, looked at for you guys. So we have about one, two, three, four, five, six, about six companies, and I want you to read exactly what I pulled out from the earnings reports and why they all sold off. So Uber sold off pretty big, a -7%, because the ride sharing costs are going up, and they're facing shortage of drivers. Etsy beat revenue and EPS once again. But guys, once again, that guidance. Heading into Etsy's report, investors were bracing for a deceleration in the company's e-commerce company's business as more shopping resumes, reopening in person. Likewise, Etsy also signaled its expectations for a slowdown as pandemic era online shopping and a boost from government stimulus checks earlier this year began to wane. Etsy said it expects third quarter revenue to come in between 500 and 525 million, missing Wall Street's expectation of 127 million. Boom, guys. Shortage of drivers, sell off from the reopening. Etsy guidance third quarter, lower pullback, slower growth, -14% decline. Let's keep moving. Roku, -9%, beat revenue and EPS, but the company said streaming hours decreased by 1 billion hours from their first quarter of 2021, totaling 17.4 billion in the second quarter. The company cited consumers seeking more out-home entertainment activities such as dining and travel in the second quarter because of pent-up demand and the loosening of COVID-19 restrictions. So guys, guidance, decrease 1 billion streaming hours, could be a slower growth in users in Q3. All these companies are having massive sell-offs after earnings reports. Skills beat revenue and EPS. They had a year-over-year decline of monthly active users for its second quarter 2021 earnings. We're looking at a 10% loss per share. The scale of the company's actual loss seems to have dismayed investors. Instead, 10% share. Skills lost more than twice that at 21 cents per share. Unfortunately, Skills costs rose faster than its revenue. So guys, user decline, at home, playing games on your phone, user decline, driver decline. Guys, these reopening and, pandemic lockdown stocks, they're having a big effect on earnings, what is happening with the economy. Fastly, -22%, missed revenue, beat EPS. They had a massive June outage. Expectations imply a significant revenue growth deceleration for Fastly. The deceleration, however, makes sense in the light of the company's tough year ago in comparison that benefited from increased internet usage as consumers were spending more time at home. So the same thing, massive revenue declines, massive customer declines. They had a 22% loss. Every single company that had these big sell-offs, guys, had massive, guidance slowdown, customer user growth slowdown. But take a look at this specific company. This is what we're looking for in this inside of the market. Datadog, plus 16%. Datadog stock jumped up on its second quarter earnings report as profit and revenue topped estimates. Beyond by growth in large customer accounts, Datadog's September quarter guidance came in above views. The enterprise software maker said it had 1,600 customers with annual recurring revenue of 100,000 or more as of June 30th, up 59% of year over year. There you go, guys. This is the key. Quarter guidance came in above views. Datadog surging 16%. So, guys, That's what we're looking for. We want to find companies that are not affected by lockdowns or reopenings. And that's what is happening in Datadog, plus 16%. That is crazy. And I'm telling you guys, if we just look at like the last 12 quarters of SoFi's, user growth, it has surged the entire 2020 and entire 2021, regardless of Corona coming out, lockdowns, reopenings. It just looks like they continue to absolutely grow their user base. And that's what I've been talking about with the SoFi stock. And we can see a massive move. Datadog is 5 times larger than SoFi Technologies as far as market cap, and they're moving 16%. I'm telling you, we could see a very big move. This is what I'm talking about, guys. Look at their investor presentation, okay? On track to exceed 3 million members in 2021, up 75% after 6 consecutive quarters of accelerating year-over-year growth. Guys, look at the growth right here. This is 2019. This is before, the epidemic, before coronavirus, okay? 37%, 50%, 54%, okay? And then, they continue to see accelerating growth. And guys, for 2021, they're not seeing any lockdown or reopening affect their business, okay? This is an online business that is in demand 24/7, okay? Student loans, mortgages, life insurance, stock market investing. This is not affected like all of those companies we just missed. On top of that, this company has been selling off massively for 7 weeks, guys. And they had an amazing Q1 performance that they did not get any credit for. And I'm telling you, this is the time to be loading shares on any weakness, any pullbacks, any red days, guys. Look at this, guys. Going to top 3 million user growth for 2021. So, guys, we're seeing a 0.068% pullback in after hours. Oh my God. See, look at the manipulation, guys. Look at that. Just disappeared. That's these big money, whales, just messing with people after hours, trying to get as many people to sell as possible. You just saw that, guys. Boom. Now it's break even, flat. They try to do these algorithm trading. Look, now it's popping up again. Guys, this is the time to be buying the stock on weakness, okay? You may not have got it in at the 15s, now it's time to buy right around the 15 to 16 range, just continue to buy before earnings, guys. We should be looking at amazing earnings. Be sure to do your due diligence and do your research, but I'm telling you, this company has one of the best, management teams, out there, guys. Look at the management team that SoFi has built, guys. You have, the CFO coming from Uber, the group business leader, Amazon, Zynga, Galileo, Citi, Amazon, Microsoft, Tesla, and the Anthony Noto has the best track record of all, the CFO at Twitter, NFL, Goldman Sachs. I mean, this is a management team that is not going to be trying to be missing quarters, with EPS misses and revenue misses, okay? They're going to be, these are some of the smartest people in the world, guys. And you see a lot of these SPAC stocks, go public and just blow out and miss, their earnings terribly. That just tells you the management isn't strong. And guys, the Q1 earnings report that they did, it wasn't a publicly traded company. They did an absolute blowout. Go take a look at that earnings report. I brought it up on this channel a couple of times, but I'm telling you, this company, I'm telling you, this management team is the type of management team to try and go like 8 for 8 on earnings reports with guidance increases, every time. I mean, that's what Amazon did. For Amazon to get to that level, they had to go 40 for 40 on earnings reports. That's 10 years of just crazy, crazy, crazy accelerating growth, okay? That's how you get these massive returns. You got to just kill it on earnings reports. They have to be perfect, crisp, with increased guidance every time. Nobody wants to invest in a company, with decreased user growth, revenue decreases, users leaving the platform. Nobody wants to invest in that, and that's why you're seeing those massive drops on those companies, because they benefited so much from the pandemic. So guys, do your research before you invest in these companies. We don't chase the green on this channel. We only buy on red days, and just because a stock is surging 10%, you got to do your due diligence on it. Is it a good investment? And if anything, we like to pass up on those companies moving very quick if we didn't have a chance to really get in on them. We want to get in early, hold our ground, and wait for the company's performance to bring us up. No artificial pumps like Robinhood and these Reddit trades, because all of those companies will bleed out drastically very fast. So if you felt this video gave you any better insight on the SoFi stock, be sure to subscribe to the channel. I'll be keeping you updated daily with all of the growth stocks and spec plays. There's gonna be a lot of great information coming out. You don't want to miss it, and I hope you have a great day.